Good afternoon, everyone. I'd like to welcome everyone to our NMB Investor Conference results call for the year 2023. I think we are just going to be moving straight forward to the presentation. So I'd like to take this opportunity to welcome everyone and to thank the management of NMB for organizing this call with iTrust and everybody else who has joined the call. Give us a minute for this to be ready, and the NMB team will be starting their presentation.
Good afternoon, everyone, and I welcome you all to the NMB Bank Investor Call for 2023. This is for quarter 3 2023, but also I think it is covering the whole year 2023. So thanks to iTrust for another opportunity to have NMB Bank in this forum. We are grateful. My name is RUTH ZAIPUNA, the Chief Executive Officer of NMB Bank. I am joined here with JUMA KIMORI, our Chief Financial Officer, Aziz Chacha, our Treasurer, but also we have Innocent and team from Investor Call, and we have Nishad. Nishad is our Acting Chief Credit Officer. So I will be taking you through the presentation, but also JUMA KIMORI will support me on some of the slides. But as I said, I'm joined here with Aziz, I'm joined with Nishad. So we will all be available to respond to any questions that you may have at the end of the presentation. Our presentation today will cover the operating environment, but also we will look at the overview of NMB Bank in terms of if we have any changes in the footprint, but also the shareholding structure, the progress that we continue to make on the implementation of our medium-term plan. We will look at the financial performance, digital and ESG agenda. But I think towards the end of the slides, we also have provided some slides on historical performance. So a 10-year historical performance is also provided. I think moving on to the slides, and particularly on the operating environment, I think Tanzania continues to be a very resilient economy despite the global uncertainties that we saw. I think the high inflations in the world, particularly in 2022, 2023, we all saw the way they hiked interest rates. But I think projections are that central banks now are likely, probably are likely done with the interest rate hikes, and probably we will now start seeing some rate cuts beginning the half two of 2024. But in 2023, we understand the US dollar weakened by 2.4% year on year against major currencies. But, you know, the oil prices are trending downwards from the peak in 2022. However, as we speak, I think they are still high compared to the period pre the pandemic. If we zoom on to Tanzania, I think, as I said, the Tanzania economy remains to be a very resilient economy. I think in terms of the credit growth to private sector, you know, the December 2023 year-on-year growth was at 17.1%. I think this is a significant increase when we compare this to the previous period, particularly pre and after the pandemic. I think the interest rates also have continued to remain relatively stable. They are trending at the rate of 15.30%. I think this is, you know, trending towards reasonably prices that or interest rates that are reasonable. Inflation rate remains relatively low at 3%. I think this continues to trend below the 5% mark, as determined by the Bank of Tanzania. I think in terms of liquidity, and we show there, we can say that the banking sector remained to be liquid. I think we have seen commendable deposit growth. The slide there, the graph, they actually show that loans and advances grew 22% year on year, and deposits grew 18.6%. However, I think it is notable there that loans and advances are actually growing faster than deposits. I think it's a funding gap that we need to note from the industry perspective. We will see the NMB numbers, but I think they all show that we need to work more on deposit mobilization. If we move to the next slide, I think we are looking at exports of goods and services, but imports of goods and services. And you will note there that exports of goods and services increased 17% year on year, while the value of goods and services imported actually decreased 5.7% year on year. I think this is a very positive trend, as it shows that consumer goods, domestic production of consumer goods is actually also growing in the country. All in all, some GDP is projected to grow at 5.3%. And I think we also show the foreign currency reserve there. We still have 4.5 months of imports. I think this is actually above the 4-month imports in line with the Bank of Tanzania. I think it is also clear from the data that we have that the Tanzania shilling continued to remain relatively stable and strong compared to other currencies. I think the shilling depreciated 8% year on year. If we can compare with the Kenya shilling, for example, that it depreciated 21% year on year, I think it's relatively strong. Now, if we look at the banking sector, I said, I think I hinted earlier that the sector remains to be solid, sound, strong, and profitable. And in this particular slide, we actually show, for example, the overall banking sector assets. We also compare NMB in line with the market growth. So the total assets for the banking sector increased to 54 trillion by end of the year. NMB total assets closed at 12.2 trillion, and that commands a market share of 23%. Deposits for the total industry have now increased to 38.6 trillion. We had 8.5 trillion. We command a 22% market share. Loans and advances are now at 32 trillion. We closed the year with 7.7 trillion, and we command a market share of 24%. I think if we look at the profitability and net profit after tax, this just demonstrates what I said, that the sector remains to be profitable. And you will see there that for the first time, the industry actually crossed the 1 trillion mark to close the year with a profit after tax of almost 6 trillion. So we still command a market share of about 34%, both profitability but also profit after tax. I think if I move on to the next slide, this slide just continues to demonstrate the investments that we continue to make on technology, investments in our people, but also on governance. and the fact that these investments continue to transform the bank into a market leader is demonstrated by, the numbers, but also the leadership in other aspects in the banking sector. We closed the year with 231 branches, but also with about 47 collection points. As I said earlier, I think we will continue to open branches, particularly in strategic locations. And with our rural banking strategy this year, we are now also, or we will now start to expand our presence and footprint in strategic villages. But we are not doing this by opening branches, but we will certainly start with alternative channels, particularly agents. Yeah, so the plan is while we closed the year with about 20,000 agents, I think the plan is to go to almost 50,000 agents by next year. I think given the rural banking strategy that we have, and with the villages that we have already selected, the plan is at least have 2 agents for all those strategic villages. So that is the plan that we have on our footprint. We closed the year with 715 ATMs. But next week, we're actually launching our strategic partnership with Umoja Switch. So I think by the end of next week, we will have our ATMs connected with the Umoja Switch ATMs. So ATM interoperability. So I think suddenly we will have over 1,000 ATMs, overnight. Yeah, so I think that is the plan that we have, and everything is set to announce the partnership with Umoja Switch. We closed the year with 7.1 million customer accounts. I think the plan this year is to open 1.5 million new customer accounts, and we have started the year well with the launch of our NMB account. We believe that certainly we will be opening many accounts, and hence supporting the country into the financial inclusion agenda. I have talked about the level of total assets that we closed the year with 12.2 trillion. I think the right side of the slide there just shows that our assets continue to yield very positive results. Yeah, our return on assets closed the year at 29%, earning per share at 1,084 compared to 859, but return on assets increased to 5%. 2019, 2020, we were in the levels of 2%. Yeah, we are talking about 5%. I think this is, we are grateful. We will continue to push transactions to alternative channels, and we closed the year 2023 with about 96% of the volume of transactions actually happening outside our branch network. Next slide. I think this just shows that there has been no significant changes in the shareholding structure of our bank. Arise continues to hold the 34.9% shares, the government of Tanzania 31.8 shares. Of course, the rest is listed, and our share price is actually the performance recorded a 49% year on year. We closed the year with a 2.25 trillion, and this is mainly because of the increase of the share price, which increased to 4,500 at year end. I think in between, we actually had amounts over 400, 800, which I believe is also, some very good news to our investors. Yeah. Summary of our medium-term plan. I think this is just to continue to inform you that our strategy is always guided by the medium-term plan. Our three strategic pillars continues to guide all the initiatives that we bring into the strategy, the yearly strategy. So winning proposition, operational efficiency, but also we will continue to innovate for the future. So we have a number of strategic thrusts and enablers, but I think we have talked about this many times, and we continue to implement various initiatives around, the mass market. I have always said, we are a retail bank. We have very strong hold in mass market, and we will continue to innovate in that particular space, particularly digitalizing, the processes, but also the products and services in this segment. Wholesale continues to be key, but really ensuring that we deepen penetration, because we do have the clients, but how are we serving them to continue, delivering results from this area? SME and agri will continue to be key for us, but of course, cost efficiency, branch productivity, looking at the credit risk, end-to-end digitalization of the processes as well in that particular area. I think it's now almost a requirement that we also show how we are delivering against the plans. And in this slide, we also show how we have continued to deliver results against our medium-term plan and against our budgets. So loans and advances, 28% year-on-year actual growth, but the plan there was 13% in terms of budget. The medium-term plan guidance is also provided, but these are 5-year, cumulative growth. So, for example, by 2025, next year, which is the last year of implementation of the current medium-term plan, we are supposed to grow loans and advances with a cumulative annual growth rate of 12%. So I think this just shows that we are, doing well in almost all the key indicators. Deposit growth, maybe a bit muted this year at 11%. But I think the plans that we have will certainly ensure that we are in line with the medium-term growth of 13%. Cost-to-income ratio, the plan was, we should be delivering below 50%. I think we are doing well. We closed the year with a cost-to-income ratio of 39%. Return on equity, 29%. Yeah, the medium-term plan guidance was actually 17.8%. Yeah, so I think we are doing pretty well in that area. Return on assets, 2.6%, medium-term plan guidance, but we closed the year with a return on asset of 5%. From the capital, total capital adequacy ratio, total capital adequacy ratio, but also core capital adequacy ratio, I think we are also doing so well. We closed the year with 23%. This is total capital, I think. Total capital, which is actually above the medium-term guidance of 17%, but also the regulatory requirement of 14.5%. I know, Prof, you will have questions on this, but we will be able to explain, the plans that we have on the capital levels that we also have. Execution of our strategy is very much on track. I think this is exactly what I will say on this particular slide. We posted a profit after tax of 542 billion. This is 26% up year-on-year, driven by strong income growth, both from net interest income but also non-funded income. The CFO will later also show the way we continue to diversify our loan book. I think we had strong growth on both agriculture SME, but also mortgage and, the rest of other segments within the portfolio. So we continue to diversify our portfolio, but I think also continue to do well from the non-funded income. Loans and advances increased 28% year on year, mainly driven by credit demand from both customers in the wholesale personal banking, but also we saw significant increase in trade and finance activities. Customer deposits increased 12% year on year. We closed the year with 8.5 trillion, but also the CFO will show the composition of our deposits, particularly from our current and saving accounts composition. I think we are more than 85%, which is again, I think, a very strong performance, because it all shows, how sticky our deposits are. Asset quality remained very strong, with non-performing loans ratio decreasing to 3.2%. We maintained, I think, very prudent levels of impairment charges, but also the NPL coverage ratio, I think, continues to trend at levels above 95%. And those are the levels that we will continue to maintain. I think our plan is to continue to maintain very healthy coverage ratio of more than 95%. 95%, 100%, and probably above 100%. I think we continue to demonstrate strong progress on execution of all the strategic priorities, driving digital customer experience, but also continue to deepen market penetration. Looking at our cost-to-income ratio, I have already spoken about that. We closed the year with 39%, but also we delivered positive jaws, so which means our revenues continue to grow faster than the costs, and I think this is a very good progress. We continue to invest in our people, but also we will continue to invest in digital and technological solutions. So I think I can now welcome JUMA, the CFO, to take us through the details of the numbers and the rest of the slides. But as I said, we are all, we will be available up until the end to respond to any questions that you may have. Thank you very much, and JUMA, over to you.
Thank you very much, CEO. And I think most has been covered by the CEO in terms of the key metrics and performance for the bank. I just want to walk you through in terms of the details of the balance sheet, in terms of how we have been able to perform year on year. Now, this slide shows that we have been able to deliver a very solid performance in terms of year-on-year growth. And if you look at it, you will notice that our balance sheet is characterized by solid growth in loans and advances at 28% year on year. But also we have recorded solid growth on the government securities, but also interbank lending. You will notice that we have recorded moderate growth. Actually, its typo there is around 11% on customer deposits year on year. And that actually reflects into what you see on the borrowing side, where we have increased our borrowing by around 84%. I think with that, the other thing that to note is that we have maintained the quality of portfolio, rather improved the quality of portfolio, where you will realize that NPL ratio has improved, and with a record of 3.2% as at year end. But I think there is also an aspect of maintaining capital position, which is stable, solid, just to fuel or rather to support our growth ambition, our expansion ambition. So from the balance sheet perspective, a very solid performance, and capital position remains stable to support any growth ambitions that we have going forward. But also from the liquidity perspective, while LDR is around 95%, excluding borrowings, but if you include borrowing, we are at around 81%. So still, we have a solid liquidity position, and we continue to manage liquidity going forward, given the funding gap you see, as you see loans growing faster than customers' deposits. On the next slide is just to highlight in terms of the two segments in terms of the growth. Overall 28% from the loans and advances, and you see there in terms of the mixed, you will notice that wholesale portfolio has recorded very high growth in terms of loans and advances at around 87.7% year on year, and also SWL has also been growing at 15%. So now when you look at the wholesale portfolio, pretty much that growth is also mostly on the PIL. When you drill down in terms of the sector-wise, personal loans continue to contribute around 60% of our loan portfolio, and SWL is around 52% of the total loan book. Our strategy to continue to diversify our portfolio remains relevant, and you will notice that agri sector, we have recorded 9% year-on-year growth, and SME at around 14%. So those two areas will continue to be our focus in terms of driving diversification of our loan book portfolio. Very solid growth, but also if you look at the mix in terms of customer segments, you will realize that large corporates contribute around 25%. So, we have done a lot. I think SWL in the last 2 years, also 3 years, we're talking about above 55%, 60% thereabout. But currently, SWL has reduced in terms of the contribution to 52%. Now, the next slide is more of the deposit mix, or rather funding mix, and you will notice that as much as our borrowing has increased by 84%, but the customer deposits composition is around 83%, which shows that we have stable funding base. But also, if you drill down into terms of the customer deposit, our CASA makes it around 85%, which really much reflects in terms of stable funding base, and this is where our strength is as well. Now, from the deposit in terms of business segments, you will also notice that both businesses have recorded growth on customers' deposits year on year. So wholesale is growing, retail as well is growing, and this is, to support the continued acceleration in terms of the loans and advances. I think overall, we still have a lot to do in terms of driving deposits. And as CEO alluded to earlier, we have a number of initiatives to ensure that we see more traction in terms of how we accelerate customer deposits growth. Now, the next slide is more of the capital for noting, as I said earlier, in terms of the contributors, the charge, in terms of fair valuation, off-balance sheet charge, on-balance sheet charge, on capital, operational risk charge. And that's just to explain the movement from 2022 to 2023 year end, just to continue to say that we have a very solid capital that will continue to support our growth ambitions. Now, in terms of the risk, of course, CEO has covered already, but if you look at it, very solid risk management as far as loan portfolio is concerned. Our NPL coverage, of course, reduced to 96, and we expect to see this improving to above 100 going forward. You will notice that our cost of risk has reduced significantly, well below the market average of 2 thereabouts. So I think for us, we'll continue to focus on retaining, or rather remaining below 2%. And of course, as a bank, we have quite a number of initiatives that we are working on to ensure that we may remain at that level And also we see the operating environment, we continue to support that. So I think overall, as CEO mentioned, we are pretty much performing well within the market. If you look at the market average, NPL ratio 4.3 as end of December, we have been able to record much better performance of 3.2 when you look at the industry. On the P&L, our P&L really characterized by solid growth that we have recorded on the income side, both on net interest income and non-interest income. Net interest income growing at 19%. Of course, if you drill down there, you will notice that our interest income actually increased by around 24%. That has been impacted by the growth that we have seen on interest expenses. Our interest expenses increased, pretty much driven by the borrowings that we had to take, and also just to continue to support the growth in loans and advances. Solid growth on the non-interest income at around 16%, and as such, our total income grew, touching a record of 1.4 trillion, which is a growth of 18%. We continue to maintain impairment charges at a level of 84%, which is on a year-on-year an increase of 4%. But again, I think the other thing that has supported the growth, the performance we see is the cost containment initiatives that we've been running with the cost increasing year-on-year 10%, against the total income increase of 18%, giving us 8% positive jaws. And I think that reflects in terms of the cost to income ratio, very solid performance when you compare with peers in the market, and the record of 39% cost to income. This is the first time we recorded that. And I think we will continue to work on various initiatives to ensure that we maintain efficiency going forward. So overall, if I look at the profit and loss, pretty much solid growth on income, both NII and NFI. But again, cost containment initiatives continue to yield the best results for us. But also the loan portfolio quality, with the cost of risk below 2%, that is a very solid performance. That has resulted into the profit before tax of around 770 billion and profit after tax of 542. That is 26 year-on-year growth. I think just to highlight that we continue with the audit towards the end, and we don't expect much change as far as these numbers are concerned, based on what we see as far as audit is concerned. Now, just to highlight, I think in terms of NII, you will notice that pretty much impacted by 48 growth in interest expense, which continue to squeeze our margin. And in this slide, you will realize that our NIM has reduced from 12% to 10%, pretty much impacted by the higher than expected growth in interest expenses. But we continue to record very solid growth on interest income, and of course continue to drive the growth on the non-funded income side, given the various initiatives that we undertake. But cost of funding has also reduced, of course, which is a good story, to around 2.9%. The next slide is just to unpack in terms of fees, NFI, growth momentum, and you will notice that we have recorded very solid growth on the foreign currency dealings. But again, if you look at the fees and commission are also growing year on year, by around 16%. And that is a record for a bank. But again, you will also notice that Mkononi, which is our mobile banking, growing year on year 28%, but also loan recovery is quite a good effort there to recover from the write-off portfolio, growing by around 13%. But interestingly, you will also notice that we continue to maintain almost same level as far as contribution of NFI to total income. So we have various initiatives to boost this up, so that we are able to diversify our income base to generate more on NFI. The next slide is more of the mix, or rather the composition of our cost base. And you will notice that staff is the majority, staff cost, making about 50% of our costs. And, the other administrative expenses follow, with the depreciation becoming the last composition. So this is just also to illustrate where we spend more. And I think it is also important to note that our staff cost has also been increasing year on year, just to reflect the investment that we continue to make on our people, as CEO alluded to earlier. So that is in a nutshell as far as financial performance is concerned. So from the balance sheet perspective, solid growth in all lines. And we continue to address issues related to funding gap. And we are very optimistic that we will maintain or rather sustain the growth momentum on the balance sheet. Profitability continues, and of course, pretty much characterized by solid growth on income, cost containment, loan portfolio quality management. That resulted in a solid growth in 2023. We have our MTP, which remains relevant, as CEO alluded to earlier, and will continue to focus on execution going forward to ensure that we generate the best return to our investors. Now, with that, let me welcome Innocent, our Head of Investors Relations, to walk us through digital and ESG, which is the last part of the talk. If you can.
Yes, 5 minutes. Thank you, CFO, and thank you, the management team. Professor, just to highlight that we at NMB Bank, we seek to create a bank that is pretty much future-proof, a bank that will be able to provide sustainable value creation for the long run. And in this premise, we believe that investment in digital and technology is one among the areas that will underpin our future existence and our license to operate. So if you look at the investments that we have made over the years, we have noted that we are making commendable results in the area of digitization as well as technology. Just to highlight, in 2023, as CEO and the CFO has already highlighted, we onboarded more than 1.2 million accounts. These are new bank accounts that we bring into the formal financial services sector. And to achieve this, we pretty much leveraged on the capabilities of technology and digital, whereby more than 84% of all that were onboarded through the use of digital channels. But pretty much to highlight that the investments that we are making in digital, they are yielding positive results, not only from a client perspective, but from a cost efficiency perspective. You will note that almost 96% of all the transactions right now at NMB Bank, they happen outside the branch. So this provides us with significant efficiency gains in line with our MTP and strategic guidelines that provide that efficiency gains is one among the key areas of focus. If you see, you will note that the number of active users in our QR as well as transaction value, they continue to increase, and this provides us a good footprint in terms of the growth of non-funded income, as the CFO has already highlighted earlier. Our Mkononi platform, which is mobile banking, continue to generate a number of growth in transactional accounts, and this also brings not only revenue, but it brings the whole sense of customer centricity and the whole sense of a good customer experience through convenience and the ease of banking. With regards to ESG and sustainability, as we have said earlier, at NMB Bank, we believe that we have to provide value beyond the financial results. And we have a sustainability strategy that is governed by almost 4 pillars. So the first pillar is sustainable operations. And we have another pillar that governs us, which is sustainable financing. We also focus on financial inclusion, but most importantly, we want to play a key role in climate action. So all these pillars are underpinned by the sense of governance. And in each pillar, you will note that we have set forth a number of focus areas, all speak to the Sustainable Development Goals of the United Nations. So just to give you a quick highlight in terms of the progress that we have made against our sustainability strategy, you will see that we have pretty much finalized the Sustainable Finance Framework, which is in line with the ICMA principles. And this was at the forefront of enabling us to issue our debut sustainable bond, which fetched more than TZS 400 billion. And it's a net worth issuance in the East Africa region. So this makes NMB's contribution in terms of the sustainable bond portfolio here in Tanzania to be more than 67% of the total book of sustainable bonds and the Dar es Salaam Stock Exchange. And with regards to the areas that we have keen focus, these include the areas of financing the MSMEs, as well as the agriculture portfolio, and bringing in millions of Tanzania to the banking sector foray. We have also demonstrated commendable successes in these areas with a growth of agribusiness 22% year on year. We were able also to onboard more than 1.2 million accounts. And this is just to show that we continue to touch the Sustainable Development Goal 1, which talks about poverty, the Sustainable Development Goal 2, which talks about hunger and inclusive growth and sustainable growth at all, as communicated by the Sustainable Goal number 8. So at NMB Bank, these commitments and this progress, they were well recognized, and you will see a number of awards that we received in this foray, whereby we were recognized as the best commitment to ESG principles Tanzania 2023, and the best bank for CSR in Tanzania by Euromoney, and the safest bank in Tanzania in 2023, just to highlight and underline the quality of our governance frameworks. So with these remarks, Professor, this brings us to the end of the presentation that we have prepared, which pretty much covered the macro scenario in Tanzania. It also covered the strategy that we have set for the bank, and the performance that we have made against the strategy, as well as our commitment towards ESG and investments in digital. And other figures that are following these slides, they just cover the 10-year view overview, which I believe falls outside the purview of this presentation, but we'll be able to reference to these in case any questions arises. Professor, over to you. Thank you so much.
Thank you very much. I think the performance of NMB in the last year is so commendable that you don't need the 10-year. I think it's more than good enough. It's in fact excellent. Just to recap for everyone, some of the highlights of the results that have been presented. NMB as a bank has a market share of 23% in total assets, about 12.2 trillion Tanzanian shillings in total assets. It has about 22% in deposits against the whole financial banking system in Tanzania, loans 24%, and yet in terms of profitability, reporting 542 billion profit after tax, that's 34%. So 23% of total assets and 34% of total profits of the banking industry. What is really commendable to see is 5 million customers digital who are able to transact digitally, 1.2 million new accounts being opened, 84% of those through digital channels. And the result of this is some really incredible numbers. The return on equity being at 29%, the cost to income ratio being 39%, showing the efficiency of the bank. The NPL ratio at 3.2%. I think Ruth, you really to be commended for the performance of the bank. I think this is really something to be noted with a lot of pride in Tanzania as far as the performance of NMB is concerned. The earnings per share for the investors has gone from 859 shillings per share to 1,084. That's a 26.3% growth. This is really extremely exciting to investors. That's why you're seeing the action in the share price. And then, of course, the coverage ratio being close to 100% at 96%. I really commend YUMA that you really want to hit that 100%. 96% is very, very close. I think with that, I will set us up for questions. I think I will start off with, before anybody else asks questions, to repeat again to commend and congratulate NMB Bank for stellar performance, particularly the senior executives who are at the table. I can't see all of you, but I know Ruth. You know, really, this is an excellent set of results. YUMA, Innocent, I think all of you have to be proud of this. So to start us off, I think I would like to recognize Muammar from Africa Alliance Fund, who has been investors in NMB Bank. This Africa Alliance Fund has been investors for a while, and I would like to recognize Muammar for the first question.
Thanks, Prof. And congratulations to the NMB management team on a great set of results. It's also great to hear from both Ruth and JUMA. The presentation was really good. I think the last presentations were good as well, but this is a significant improvement on what was there before. So into my questions, I have a few, but I'll just start with cost to start with. Your cost to income ratio has improved significantly. It's now 39%. You haven't expanded your branch network. There has been no staff additions. I know your medium-term guidance is to have a cost to income ratio below 50%, but is it possible maybe just to give us what your cost to income ratio target is maybe for 2024 or for the next 3 to 5 years, given how far this cost to income ratio has improved? Related to that, is it also possible to give us sort of an updated guidance on some of your general metrics? I know you've performed well above your medium-term guidance, but like the cost to income ratio, it'd also be nice to get an updated guidance on your return on equity, where you think the bank ideally should be performing in 2024 and the years after that. Related to the cost question as well, I just wanted to know, I know you guys have spent significantly on data centers, updating your IT infrastructure. Are there any significant IT spends that you plan in the next couple of years? And then my last question on costs is, I'm not sure I heard this correctly, but did you say you plan to have 50,000 agents by the end of 2024? And if so, can you just maybe give us a bit of comment on what the cost of building this agency network is, maybe on an agent per agent basis, and what the revenue share with these agencies are? Thank you very much.
Very much. So I think I will take your questions, and I will ask my colleague to add if need be. Your first question on cost to income ratio and where we think we will be closing the year 2024 plus other metrics. I think what I want to say is that the execution of our strategy is actually guided by 3 key principles. Yeah, the first one is strong corporate governance. The second is long-term view, and the third is efficiency. And I will talk more on the long-term view. I think the long-term view actually continues to guide us in terms of the investments that we need to put in the business, so as to ensure we sustain a long-term view in terms of sustainability of the bank. Yeah, I think we are really not moved by these quarter-on-quarter performance and the amounts that we deliver in terms of profitability. I think our concern is how will we continue to sustain these results? Yeah, so looking at the long-term view of the company and ensuring that we will continue to sustain these returns for the investors. So which means we will continue to invest. As I have always said, we will continue to invest in technology, we will continue to invest in people, we will continue to invest in governance. And I think the slide that is projected is our medium-term plan guidance. And I think we will continue to deliver performance and work and execute in line with this. Yeah. So I think the cost-to-income ratio, the guidance is below 50%. We will continue to deliver as such. We are 39% this year. We believe, 2024, we will not go, significantly away from the 39%. But also we are cognizant of the fact that we need to continue to invest in the business, and the investments that we continue to put in the business will continue to sustain these results. Yeah. But I think maybe if I continue with your next question in terms of the significant ICT infrastructure investments, certainly we have and we have presented this many times, that we are changing our core banking system. Yeah, so the process has already started, and the plan is, by early next year, we will have already either changed or upgraded, the current core banking system. The plan is really to have a core banking system that is fit to deliver the vision and the strategy that we have. So I think those are the significant investments that we have. Agents banking, certainly, the plan is to grow the network to 50,000 agents by the end of next year. And this is guided by the rural banking strategy that we have. And I think the rural banking strategy is really the strategy that we believe will support significantly the deposit mobilization initiatives that we have. Yeah, I think that only 22% of Tanzanians are banked, and most of the unbanked Tanzanians are in the village. Yeah, the cattle auctions, for example, people transact using cash. We really want to tap those areas so that we can continue to mobilize retail deposits that are cheap, they are reliable, but they are also sticky in the bank. So I think 50,000 is doable for us. You probably have noted that, the 28,000 that we have now actually grew from just 10,000 in 2021. Yes. So it is possible, and there is no significant cost that is involved in the respective expansion of the agents banking. I think given the model that we have, we are able to actually pass on most of the cost to the agents themselves. Yeah, we don't have any significant capex investments when it comes to onboarding of agents in the bank. I hope that I have responded to the question, but I don't know, Aziz, Juma, if you have anything to add. Nothing. Thank you, Prof. Over to you.
Thank you very much. I think that was a comprehensive question. For anyone who has additional questions, please contact Innocent. I think Innocent will be very happy to engage with investors who have any questions. I'd like to recognize Krishnan, who is the Group CEO of Alliance Insurance, one of the major insurance groups in the country and regionally. Krishnan, karibu.
Thank you. First of all, commendable performance. As always, it's a treat to be with NMB. and particularly in presence of our Professor Varsame. Number one question is about the agricultural financing, and yes, it's very, very impressive, and to note that there is a tremendous increase. I would like to know especially your efforts on financing small farm holders. Would you be able to comment on this, please? And what special efforts you have taken on this front? This is question number one. Question number two is about onboarding 1.2 million customers through digital. I think out of that 80%, over 80%, you have done it digitally. Don't get me wrong. How many of them are meaningful customers in the sense where you feel that they would contribute from a banking point of view? These are two of my questions. And again, congratulations to Ruth and her team. That's all.
Okay, thank you. Okay, Prof, you want to collect more questions, or we can respond to the...
I think we can respond to Krishnan. We are collecting in the meantime more questions.
No problem. Nishad, do you want to respond to the first one? Maybe Juma, you can respond to the second one.
Yes, thank you very much. So on your first question, in terms of financing the agri sector, particularly the smallholder farms, we do actively support this sector, particularly through the agri finance window, where we've got concessional financing available from the regulator at a rate of 9%. And in line with that, it does support us substantially in supporting the smallholder farms, including some other projects at the SME level, such as cattle fattening, etc. So yes, we do actively support that sector. Thank you.
Okay, thank you very much. I mean, with regards to the customer accounts that we opened, 1.2 million, as to whether how much is meaningful in terms of continue to transact, I think, as Madam CEO said, I think our focus as far as sustainability is concerned is one of the things that we're looking at is financial inclusion. And we want to bring as many as possible people into the banking or other financial services. So as we speak, last year, as we reported, 1.2 million accounts opened. I think the funding in terms of accounts that are funded as such is above 70% funded accounts. And we continue to sensitize across the country. If you look at the beginning of this year, we launched our NMB PESA, and we continue to see good traction in terms of the uptake of that particular account. And I think given the campaigns and awareness that we continue to drive, we expect more of the account holders to continue to transact using their accounts. Thank you.
Yeah, I think the model that we have in the bank and the follow-up in terms of reporting at a management level, committees and all that, certainly, I mean, there is no way, we can have those accounts opened and then they are not funded or people are not utilizing. And I think this is just demonstrated by the results. The NMB Mkononi revenue that we continue to get, they all demonstrate that, people are using their accounts, people are opening accounts, but also they are using they are transacting, not only transacting, manually, but also digitally, meaning that they also use our digital platforms that we have. So, I mean, work is being done, execution, and people are being followed up, every day. There's no way those accounts cannot, operate, at least to a significant percentage that is reasonable. Thank you, Prof.
Thank you very much. I think next, I think there is a question from Ms. Saria Mwende. Saria?
Can you hear me?
Yes, please proceed.
Yeah, thank you, Prof. First of all, I would like to congratulate the bank for a wonderful performance. I have two questions. My first question is, I would like to know how the bank's accounting policies compare with their major competitors. That's my first question. My second one is, what are the primary risks or risk factors that affect the bank's results? Thank you, Prof.
Yeah, so
Do you hear my question?
I mean, we had the questions.
right.
We will respond. I think Juma will respond. Juma, IFRS reporting.
Yeah, so yeah, in terms of the two questions, just to highlight that Tanzania adopted IFRS, and therefore we are expected to comply, all entities are expected to comply with IFRS. And also there is aspect of regulatory reporting, of which we are all required to report with. So I don't see much deviation between ourselves and the industry, colleagues, as far as accounting policies are concerned. There could be internal approach in terms of how we process the information, but overall, as far as financial reporting is concerned, we are guided by those. But also NBAA as well issued some standards, so of which every entity is expected to comply with. Now, with regards to the risk factors, of course, I said earlier about funding. If you look at our balance sheet, of course, you'll notice that loans and advances are growing higher, much higher than the customer deposit. That continue to pose a risk for us. But again, competition in the market, you can't avoid that. I think the important aspect is in terms of how we mitigate and how we, as we travel the journey, disciplined execution of our strategic initiatives, but how proactively we respond to certain, events in the market. That is, I think, what has resulted to the result that we see. Thank you.
thank you very much, Yuma. I think we will move on to a very a recurring question that I seem to get, which is, what are the plans of NMB in terms of expansion outside Tanzania, if any?
Yes, so I think those plans are there, and I think they are advancing now. We are very serious. We have the bank, the board approval. So we are executing. But as I have always said, we will continue to be very careful in terms of, in terms of the steps, but also the analysis that we make. And we have categorically said that greenfield for us, I think no. So if we are going outside, I think this is going to be via acquisition. Yeah, but I think those plans are there. We are serious about the plans. We are already, we are already taking actions within the bank, and yeah, so hopefully, inshallah, in the near future, you will see us somewhere. Yeah, those plans are there, very, very serious. Yeah.
Thank you. I think we will be waiting for the next upcoming meetings to find out how those plans are getting into execution. Now, another very recurring question which I have been getting is around the stock split. All shareholders want to know, what are the plans of NMB? In the last call, there was plans that this is something under consideration. Has there been any decision, any movement in terms of looking at splitting these shares of NMB?
I think the answer remains the same, Prof. Yeah, we are looking at it seriously, and I think we have already undertaken a study internally. So what is remaining now is really just a decision. Yeah.
Okay. So I think so the decision is still pending. That's something that probably will be coming up in the near future. Of course, the third and perennial question that always comes up is on the NMB's dividend policy and the dividend expectations. I don't know if you can give some color, if there been any changes in the policy, if it's going to be historically the same or anything new in that area.
So no changes in the policy, Prof, but I think this is also linked to the question, your earlier question on cross-border expansion and all that. So all those will need capital, yeah. So I think we continue to look at the dividend policy vis-a-vis the plans that we have, but I think certainly we also continue to see significant increase in loans and advances. So the risk-weighted assets continue to increase as well. We need to continue growing this business, supporting the country and all that, supporting the growth within the country. So I think at the moment, we continue to look at the dividend policy in line with the plans that we have, specifically the cross-border plans, but also the growth plans that we have for the bank.
Thank you very much. I think I would like to recognize Bhavit. I think he has a question. Bhavit, welcome.
Thank you very much. First of all, brilliant growth. You are defying numbers that the market was projecting, which is a very good sign. A few questions about how the strategy looks like for 2024. Firstly, is around we observed that deposit growth is currently behind the MTP plan. What is our strategy for deposit mobilization? And a big chunk of that is around FCY mobilization. Beyond our green bond strategy, what else are we looking at? Secondly, we saw an increase in net interest expense. The growth was a lot higher than what was expected. So what was the key driver that? Is it FCY or LCY? And thirdly, in terms of the asset portfolio, especially on the FCY, how much of the percentage is fixed and how much of it is floating, which will help us curb some of this impact? Thanks a lot.
Okay, thank you very much. So I think maybe just let me repeat on the deposit mobilization strategy that we have. So certainly you are very right that loans and advances are growing faster than deposits. So I think going forward for us, more efforts need to be put to onboard and mobilize deposits. So the plan that we have is that we need to mobilize cheap, stable, and reliable deposits. Those deposits are actually retail deposits. I think the good thing is that we have a huge branch network. So we believe that using the network that we have of almost over 278 channels, the footprint of over 278. So we have 230 branches, but I said earlier that we have close to 50 cash collection points, which, basically they are branches as well. So I think going forward, our plan is to continue mobilizing cheap, stable, sticky deposits, which are retail deposits. I talked about the rural banking strategy. Yeah, the rural banking strategy is a strategy that is really, really geared to bring in deposits. So rural banking strategy, but financial inclusion. We talked about the NMB Pesa account. The plan is to open over 1.5 million customer accounts. So with the rural banking strategy, also the plan is to ensure that we are present in cattle auctions. Yeah, in Tanzania, there are quite a number of cattle auctions that are happening across the country. But we all know that in those areas, people are transacting using cash. So what means are we using to be there to also, tap this market, which is actually potential. Deposit campaigns will continue. Our Teleza Kidijitali campaign will be a year-round campaign, and we believe, that will continue to bring in deposits. So we believe that the strategy that we have certainly will ensure that we continue to bring in and mobilize deposits that are stable and they are sticky and reliable for the bank. I think I earlier hinted that the composition of our deposits is actually 85% CASA. CASA is current accounts and saving accounts. We will continue that trend to ensure that, we bring those deposits that are stable for the bank. I think from the loans perspective, these are growing, and I don't think we need much more effort in that particular area. So more focus will be put on our deposit mobilization, and we believe that the strategies that we have will support deposit mobilization. Juma, on the composition of FX, I don't know.
Yeah, if you can allow Aziz to.
Yeah, so on the interest expense, certainly, the structure of the balance sheet is such that only about 11% is in foreign currency. So in terms of contribution to interest expense, certainly, major part of that is contributed by what Madam said, the term deposits part of our local currency deposits. And then I think you had asked something around variable FCY. So I think how we manage a balance sheet is on the asset side, it's majorly variable pricing. And so it is the case on the liability side, especially around borrowing. So just make sure that we match our pricing structure, both on the assets and the liability side. So I think I'll stop there. Thank you.
Thank you, Aziz. I think in the interest of time, I would like to wind up here. This is not the end of questions. I'd like to invite all investors who have questions either to send it to us at iTrust or to contact the investor relations led by Innocent. Let me close by again thanking Ruth for this presentation, and YUMA and the whole team, Aziz, everyone there at the table. Thank you very much. I think everybody is quite impressed, and I think we are going to give you a round of applause for that one.
Thank you, Prof, and thank you, everyone. Thank you all for your continued support. Thank you, and bye-bye.
Thank you very much. Bye-bye.